Hi friends, in today's video I will reveal some often overlooked UK tax secrets which could help you to lower your tax bill in the UK in year 2025. Just to make it more relevant, I've used our official gov.uk website to bring you the very latest numbers for the current tax year 2025-2026. Well, I'm fully aware it is not a tax season, but I just thought to throw some light on some smart strategies and some allowances which I thought you might not even know that they exist, but they do. So let's jump in. So as we can see here, these are the UK's income tax rates and bands. So up to 12,570. So this is the figure which I would want you to keep a note on. So the personal tax allowance is £12,570 per annum. So that means that you won't be paying any taxes up to that amount. So whether you are earning through rental income or doing any side hustles or any sort of job, or even your current main job, if you're making up to £12,570 per annum, then you don't need to worry. You don't need to pay any taxes on that. But there are some nuances here, so we'll discuss here. So now let me clarify that UK follows a progressive taxation system. Yes, that means if any employer is offering a salary which is more than £60,000 per annum, so that doesn't mean that you'll be paying 40% tax rate. So when we go through these tax slabs, so up to £12,570, you won't be paying any taxes on that. So basic rate tax allowance is between £12,571 and £50,270. So the basic rate tax is 20%, and if you're coming into that threshold, then you need to pay 20% tax on that. But if you're a higher earner, let's say for example if you're making 60,000 in this scenario, then that doesn't mean that you will be paying 40% tax flat, but that means that up to £50,270 will be paying 20%, and the remaining amount, which is the difference, obviously when we calculate the difference, is £37,699. so that on that money you'll be paying 40% tax. So technically how this works is £50,270 minus £12,570, which is your £37,699, and the remaining £22,301, which we've got it from deducting off of £60,000. So £60,000 less £37,699, that amount the taxman would charge 40% on that. So again, this also depends on various factors as well, such as the type of job the person is doing or what sort of allowances he is allowed to deduct from his current position. So these are some of the nuances which we need to understand first. So if that part is clear, then we'll understand how we can lower down our tax bills. So I've divided 4 segments here. So the first segment is maximizing personal allowance. The second segment is utilizing tax efficient savings. The third segment is claiming allowable expenses. And the fourth segment is understanding capital gain tax allowance. So first of all, let's figure out what is my personal allowance. And this amount is £12,570 per annum, which we have already covered earlier. But you might think that, hey bro, yeah, I know that £12,570 up to that amount I won't be paying any taxes, but what that does mean? So how could I benefit out of this? So the answer lies in your unused personal allowance. Yes, let's say for example, if you are in a civil partnership or if you are already married and your spouse, him or her, is not working or working up to certain amount, up to £12,570. So you can get his or her allowance, the person who is not working, to the person who's working. So it's very easy, guys. So what I'm going to do, I'm going to show you a small example here. So for example, if you have any unused allowances and if you are in a married or in a civil partnership and you might be able to transfer a portion of it to your spouse. And considering if they earn less than the personal allowance, so suppose if your spouse is not working and if you would want to transfer certain portion, then if you could do so. So in 2025 and 2026, the limit is you can transfer of up to 1,260 pounds. Yes, so this is the exact limit which you could transfer. So this transfer is called the marriage allowance, and this could mean a saving of up to 252 pounds. So let me show you how this works. So we are here at the gov.uk, the official website. There is a dedicated calculator as well, which is given on the website, so you can calculate how much you could save as a couple. And a very good example also given here. In this page, it clearly mentions that who can apply. So if you must be a married or in a civil partnership, you do not pay any income tax, or your income is below your personal allowance, usually 12,570 pounds, and your partner pays income tax at the basic rate. Now let's discuss the segment number 2, which is utilizing tax efficient saving. Now let's talk about the UK's most powerful tool for reducing your tax burden, and that is through individual savings account. Yes, ISA, that's what I'm talking about. But before jumping in, let me show you that why people are opening up more and more ISA accounts these days. And the reason for that is the taxation system. So when we talk about the capital gain tax, which is a tax which you need to pay just in case if you are selling any of your personal property or if you're selling any type of shares. So in the previous years, which is 2024, 2025 tax structure, the such capital gain tax was 10%, but now from 2025 to 2026 in this tax structure it is gone up to 20%, and that is for the basic taxpayers. As we have understood in the previous slide, which is what are the tax structures we have in the UK. So the first tax structure is a personal allowance, which is free. Then the second structure is basic rate tax structure. Then the third one is higher rate tax structure, and the fourth one is additional rate tax structure. So anyone who's earning above basic rate tax structure, then they have to pay, they earlier used to pay 18%, but now they are paying 20%, so which is a huge amount. And that's why everyone additional or a higher rate tax earners taxpayers are paying more these days, and they've decided to open up a individual savings account where they don't need to pay any sort of taxes. And yes, there is no income tax here on the earned interest or any type of future gains and profit if you make through this type of account. So that's why it is also known as tax-free savings account or tax efficient or tax advantage accounts here in the UK. 20,000 pounds per year allowance. So that means every year you can pay in of up to 20,000 pounds into this particular account. And there are 4 types of accounts, such as cash ISA, stocks and shares ISA, innovative finance ISA, and lifetime ISA, also known as LISA. So you can divide equally or you can divide as per your convenience, and you can contribute into those accounts, and in the future there is no tax liability. And in my opinion, this is UK government's biggest tax loophole. So the deadline to use this particular allowance is April 5th, 2026. So this is the deadline for contributing up to 20,000 pounds each year. So this is on the basis of use it or lose it. If you don't use your allowance, or if you don't park in a safe haven like this, then that means that you're losing it. So now let's discuss the types of these account. So in the UK, most people do prefer to park their cash into cash ISA. So there are 4 types of ISA, individual savings accounts, are available for UK residents. Type 1 is called as cash ISA, the second type is stocks and shares ISA, and the third one is lifetime ISA or LISA, and the fourth one is innovative finance ISA. So these are not in order, but we'll go through each type. So the first type is cash ISA, which is a very straightforward, and you can easily open through your bank, your personal bank, or you can open through any type of platforms such as Trading 212, or you can open via Invest Engine. And these are not my recommendations, but you can check further for more details. The easiest thing what you can do is you can go to Money Supermarket website, okay, and you can I'll put a link into this description so you can check it further, and you can find out what are the best cash ISA rates available currently, so then you can make your own decision. Okay, and so this means that whatever money you can park up to 20,000 pounds each year, and in the whole cash ISA if you would want to, which is not a, ideally speaking, not a good thing to do so, but essentially you can use this for your emergency fund. Most of the people what I've come across is they use it for just emergency funds, and the interest rate you might get is around 4 to 5%. So whatever interest you might get, or it's just like a safe haven to just park, it's kind of a fixed deposit. So if you have a bank account and if you are parking up to 20,000 pounds cash in a high yield savings account, and if you think that if you can go 5% up to 5%, I would say, even if any bank is offering up to 5% as a high rate interest, then I think so that threshold will come under 1,000 pounds, but it's best to do your own maths. Okay, so if you are a basic rate taxpayer and if you are paying 20% tax, and if you are parking your cash which is more than 20,000 pound, then ideally speaking it is not a good way to do so. So you can park up to 20,000 pounds, and where you need to make sure that you are not going to earn interest more than 1,000 pounds. And if you are a high rate taxpayer, then the limit is 500 pounds. But if you are an additional rate taxpayer, then there is zero. So it's not a good option to park into the bank. So the safest option is cash ISA, okay, and any other types of ISA in general. The second type is stocks and shares ISA, which is my personal favorite, and that means that you can essentially see where your money is going, and you can grow your money. So you can use through investing platforms. You can also use banks. In my opinion, investing platforms such as Trading 212 and Invest Engine are the popular ones where they don't charge any fee as well. So none of them are my recommendation, and this is not a financial advice, but this is what I've come across, that they don't charge any sort of fees. So but still you can check it out further. And suppose if you are investing in a very good ETF or mutual fund or any type of securities, then there is no tax in that money. But again, you cannot put in more than 20,000 pounds each tax year. So again, this is a very simple and very good way of investing where the money, your money, will work for you. Okay, and so the third part is lifetime ISA. So in this one, what happens is you can put in up to 4,000 pounds. There is a limit there, and government will give you 1,000 pound each tax year. So let's say, for example, if you're putting the whole money lump sum or in portion up to 4,000 pounds, then government will give 25% bonus. So these can be used either for retirement purposes or to buy your first home. Okay, so that's all. And the fourth type is innovative finance ISA. I don't want to go too much deeper into this because, to be honest with you, I've never used this type of ISA, and I don't have any experience and I don't have much knowledge on that. So it would be better if you can check some other videos and learn more about how it works. But what I have noticed is it's a very complicated ISA type, and most people, they don't put their money in. I'm not against any of these types. All of these types are for us, okay, and they will remain as it is as long as government won't make any changes into these types. Okay, so please check some other videos about how that particular type works. So sorry for that. So this next secret applies specifically for self-employed people or those who are having some benefit in their current jobs. So looking at the current tax year, which is 2025 2026, there is a trading allowance, and this allowance is £1,000. So this is applicable to those who are having properties, or those who are property investors having buy to let properties, or those who are having self-employment business. So up to £1,000 they can claim certain expenses. And the cherry on the cake is if your self-employed income or the whole property income, sorry, buy to let properties rental income is below £1,000, then that means you do not need to even declare that you are making up to £1,000. If you are a self-employed, then do not forget your trading allowance. So for self-employed people, the type of allowances which they could claim would be traveling expenses or office supplies, and any courses if they are taking for their professional development, even they are also allowable. So up to £1,000 expenses if you make for this kind of thing, and certain cases more than that as well. So it's better to check with your accountant. So it is very crucial to keep the record of all such expenses, and also to understand what are the expenses which I could legitimately claim off of HMRC. And that's why it's very important for us to understand. So if you know any of such expenses, many times cycle to work and other type of like expenses such as like petrol allowances, and certain company they are offering work from home, so a portion of their broadband bill is also allowable expense. And remember, the keyword over here which I have used is allowable expenses and legally and morally. So don't try to claim things which you are not entitled to, and always remember that honesty is the best policy when it comes to taxes. Now in the segment number 4, we'll discuss understanding capital gain tax allowances. So if you sell any assets like shares or your second property, then you might be subject to capital gain taxes. For current year 2025-2026, the annual capital gain tax exempt amount for individuals remains at £3,000, and as we can see here from the official website, it is same as it is. So this means that you can make a profit of up to £3,000 from this kind of sales each tax year before you have to pay any type of capital gain taxes. So understanding this allowance can help you plan the timing of your assets disposals to minimize your tax liability. For instance, if you're planning to sell 2 sets of shares which are not under stocks and shares ISA, obviously, then the total, and if you think that the total gain would be more than £3,000, so this £3,000 is your allowance, so you can consider to selling them in 2 different years. So just to keep in mind that capital gain tax is very complex, and it also depends on individuals' income tax band, and there are so many nuances to this. So it's always best to seek professional accountant or a tax planner's advice. So there you have it, few tax secrets and smart strategies. I've used official gov.uk website, and this is referring to 2025-2026 tax year. So this could help you to lower your tax bill legally. If you want to know how UK pension match works, then please click on this video and I will see you there.